Good. All right. Hey, guys. Joe McCall here. I'm wearing my fancy professional microphone and headset here. And glad you guys are here. Let me mute this thing. So we're doing this a couple different ways. This is a live video that we're doing to our private Virtual Lease Options Facebook group. And I'm also going to be putting this out as a podcast on the Real Estate Investing Mastery podcast. So welcome, everybody. Hope you guys are doing well. This is a topic that's near and dear to my heart. We're going to be talking about lease options. We're going to be talking about how to find good tenant buyers. And let me just introduce real quick to you Jesse. Jesse's been a friend of mine for a long time, Jesse?
Long time. 7 years probably now.
Wow. Yeah. So it's a long time.
Yeah.
But Jesse is a mortgage broker, and he's done lots of lease option deals in the Minnesota area. Minnesota. And with his mortgage broker background, he understands this business really well. And so he's done a lot of deals as an investor, a lot of deals as a mortgage broker, and he's got a lot of experience. He brings a lot of things to the table. And Paul is a friend of Jesse, and I've not met Paul yet, and we'll talk to Paul here in a minute. But welcome to the show, guys. How are you?
Well, I'm doing. Go ahead, Jesse.
It's 13 above. When we spoke earlier, it was -8. So we must have a warm front coming in. It's 13 degrees. I'm excited about 2018. Things are good.
I got 18 degrees right now, and it's a heat wave.
Oh, put the t-shirt on.
Yeah, but good, man. So, Jesse, I just introduced you a little bit. Paul, would you introduce yourself and say hi to everybody?
We're right here in sunny Pittsburgh, Pennsylvania, and it's about 12 degrees here. Joe, thanks for having us. Looking forward to talking with your audience, you and your audience today. We've been in this business for quite some time. My wife and all, we're also real estate investors.
Yeah. We've
owned and operated several different mortgage companies. We've got a credit enhancement company, and we've got a pre-qualification process too. So we understand what it takes to do lease options, and that's really our sweet spot.
Good. Excellent. Well, thank you, Paul. Welcome.
Thanks.
So, hey, Jesse, talk real quickly. I think I've had you on the show before, haven't I?
We've done, I think, a couple of these.
Yes.
Years, yeah.
So talk a little bit about your experience doing lease options and what got you started doing lease options. Why do you like them so much?
Well, I got into it, I think it was about 2011. And I honestly don't know what was the very first thing that I saw. I believe it was something online. It might have even been a Wendy Patton thing. And it started getting more into it. And I saw something that you did with her and saw all the different, automations you had. And I didn't realize at that time what a dork I'd become into all the automation in that world. And who knew I'd be, doing that kind of stuff with 12, 14 phone numbers down the road and Podio setups and people on the other side of the world. But yeah, I said, this is awesome because at that time I was doing mortgages. And so my goal and my job is to get someone into a home one way or another. And I don't like to tell people no. And anyone who's ever worked with me as a client or a business partner knows that I'm a creative guy and I want to get things done. So I said, this is really cool. And I had a couple people that fell into that boat. And I knew that it was a good reason they couldn't get financing. They didn't just not pay their bills. They had a great, I want to say in the best way possible excuse for not qualifying, and put them into a property. First one ever, actually, we bought. So it's kind of cool. So we bought it. I knew the money they had down, and it was a great deal. They ended up buying it about 2.5 years later. They had equity. It appraised higher than what they were even buying it from me for. I made $8,000 on the deal just on the option part alone, let alone the back end, let alone the $550 a month on the cash flow. So it was a sweet, sweet deal. I'm like, holy crap, I got to do more of these. These are really cool. And it's a great way to, do that. So I've been doing lease options ever since 2011 in conjunction doing mortgages. And I do both because honestly, the mortgage business is important to know that end of it, right? And Paul can attest, he's got a great experience in the mortgage business as well. And he knows, and I know that, not everybody knows that side of it.
Yeah.
And I think it's a really important thing is to know that part of the business, or to at least have someone on your team who does, because we're not just throwing people in homes and crossing our fingers here. We're setting them up with a plan strategically to get, financing down the road.
Well, and let's talk about that for a minute too, because the main objective of a lease option is to set everybody up to win.
Exactly.
Obviously, you, the investor, needs to win, the seller needs to win, and the tenant buyer needs to win. And so one of the mistakes that a lot of investors have made in the past is they do lease options on deals that are hardly ever going to go to completion anyway, right? Because they're in bad areas. Even if the tenant buyer could get their credit fixed, would they, once they can get a mortgage, would they really even want to buy that home and live in that neighborhood? Chances are probably not. So the idea is, on a lease option, you want to set up the tenant buyer to win where they can get a mortgage, right? And I hear gurus sometimes say this, and it bothers me how I hope the tenant buyer doesn't buy the house, because then I can put another one in and get another and make more money and extend it out, et cetera, et cetera. My philosophy ever since I went full time in 2009 was I want to only put tenant buyers that have a realistic chance of getting a mortgage in 6 to 12 months in my homes. I want them to have a shot at home ownership. I want them to buy the house. I want to set them up to win. And so it's really, really critical and important when you're doing lease option deals for a lot of reasons. You'll make more money. You'll get a better reputation. You'll stay out of trouble. Is put people who can afford the house in the home, who have a realistic chance of getting a mortgage as quickly as possible. And I'm assuming you guys agree, right?
Oh, absolutely. Absolutely. What I see is I do see other gurus, Joe, out there that are setting people up for failure and hoping that they fail. And the problem with that, it's twofold. Actually, like you say, I mean, along come Dodd-Frank a while ago, and that could be a defendable position from somebody who's been set up to fail. And the penalty for non-compliance in Dodd-Frank is you have to give back the full non-refundable option deposit. It becomes refundable through the court, and also up to 3 years worth of the payments that they have made. So it's not just something small. So yeah, we're in the same. My wife and I, we're real estate investors. We want to see people succeed as well. So I'm glad we're on the same page here.
Well, I'm glad you brought up Dodd-Frank too, and I want to talk about that more later and how that applies to lease options, and if it does even, right?
Right.
So Jesse, talk a little bit about when you get a property under contract to lease option. Now you're going to sublease it, put a tenant buyer in the home. What are some of the things you look for in a good tenant buyer? And take it from the mortgage broker's perspective. What do we investors need to know when we're looking at tenant buyers and their credit and what is, from a mortgage broker's point of view? Does that make sense?
Yeah. So I would say the number one thing that I look for is really the reason and the story, to be honest with you. Now, that doesn't necessarily always coincide with will they or won't they, and when will they be able to get financing, right? But the story to me is everything. And, anyone who's ever been through a mortgage, especially in the last few years, or heck, since 2010, it's like going to the dentist. You'd rather just get punched in the face. Or it's like going to the DMV, right? It's not fun. We ask a lot of questions. There's a lot of things that we have to look at. But so it's multiple layers of things. But the biggest thing is the story. If you're not paying your bills and you have no excuse for not making payments, everything is late, but there's not a good reason for it, like a job loss, like a new business, like a divorce, like medical, that's a little scary. When someone says to me they went through a bad divorce and then their credit went bad, or it led to a bankruptcy or a short sale or foreclosure, I don't really need to hear much more. Honestly, I've been doing loans for 15 years. I've seen so many people go through divorces and get, wrecked on the way back out, right? Yeah. Or medical. You can't help medical at all. Now, hopefully that whatever caused it is done or has ended recently. Now you're on the upswing, right? We want folks who are here going up, not, on the downhill still, right? If it's self-employment, that's a great one. I've done a lot of self-employment lease options for folks who are a year into their business, or maybe they've been in their business for years, but they write off everything. Right. And I even have some bank statement programs out there, which are pretty cool. And some pretty unique financing options. So, if there's any way to get financing, our team can figure it out. But there's still just that black hole of the population that can't get financing. And what are they willing to do? What are they going to do in that time frame? You know, that's the big thing. If they're not even willing to look at credit repair, credit enhancement, if they, you know, if their job is getting worse, or, you know, there's those types of things. So
Yeah.
are they going to work with you, and what's their story is the biggest thing. And then honestly, Joe, I don't think the investors need to get into it too heavy, because right then you're trying to be a doctor when you haven't been through that. You know, let's see what the facts are, and that's where Paul and I kind of come into play, as we look at all of those hard numbers and we can go through that stuff.
Well, let's talk about some of those hard numbers, right? What does and one of the things I like to focus when I'm FHA loans are some of the easiest loans to get, right?
Correct.
And I joke around sometimes. The subprime lending never went away, right? It's always been there. FHA is the biggest subprime lender in the world.
Yeah.
But like, it's easier to get subprime. I mean, to get FHA loans, because you only have to put 3.5% down. But the cool thing about them is they have an upper limit on the amount of money they will lend on a home. And I'm not sure if there's a lower limit as well. I don't think would FHA lend on a $30,000 house?
That gets more to the actual lender, broker, bank itself. Some of them impose limits, 50 grand, 30 grand, but yeah, not FHA.
So here's the thing though, you want to stick in that FHA sweet spot, right?
Yes.
Because you typically don't want to chase after homes that are in the, you know, if FHA limits are 275 in your market, you don't want to send a bunch of marketing to the $500,000 homes, just because it's a little harder to get those mortgages, right? So you're targeting homes in that median price range, the middle of the bell curve. So what are the requirements today? And I know they change over time. You can't promise anything, but like, what are the general requirements today to get FHA financing? Because that's important to know when you're doing lease options, right? You want to know, well, how far away is this tenant buyer from meeting these requirements? And what do they have to do to meet those requirements? So what are some of the minimums? Absolutely.
So for my company and most of the companies out there, again, everybody's got a little bit different, but 580 credit score will get you in the door for FHA financing. I have a friend and a partner I work with who can go down to 520 if you have 10% down. Okay.
That's insane.
So
can you believe that? 520 if you have 10% to put down? Is that still an FHA loan?
Yeah. Yeah. 10% down. And 520 with the VA, actually, with a 0 down VA, which is amazing. I mean, that's it. Yeah. Okay. Huge props to our veterans, and they should get the most favorable.
Yeah, I agree.
Sure,
I agree. All right. What else?
3.5% down. It can be a full gift. So it doesn't even have to be your funds. It can come from a blood relative. And typically we can go up to a 50% back end debt ratio. Wow. So how that factors is, let's say you make $5,000 a month salaried or hourly at your job before taxes, right? So up to 50% of that, which is $2,500, I look at that $2,500, then I subtract anything that shows up on a credit report, and only things on a credit report: student loans, credit cards, auto loans, any other property. Whatever's left from there is your disposable income, and that's what the housing payment has to go into. Yep. So you can even go higher on this. So, I mean, right now I'm actually working with 2 people who they could go conventional, but I'm using FHA because they want to get a bigger, nicer home, and they expect to make more money in the next year or 2, and then we'll refinance them out of it. So one thing that Paul and I are actually talking about a little while ago, which I like his take on this too, though, is it gets you in the door. It gets your foot in the door. But again, the cool thing we all know about a lease option is that you're getting time, right? We're giving you time when a bank won't. We're giving you the opportunity when a bank won't. And so, yeah, I can get you that loan at 581 credit score, but you know what? Between what we do, if Paul can get you to a 660 or a 680 in a few months or 6 months later, anyways, you're already in the home that you're going to be in. Now you can get conventional financing. And now you can get a better deal. Now you can get something where you don't have mortgage insurance for life, or you have to refinance out of it.
Okay.
So I think it's the great loan to get you in the door, but it's not necessarily the best one that you can get.
Paul, what were you going to say?
Yeah, may I interject a couple things here? There's a thing put on by Fannie Mae and Freddie Mac called loan level price adjustments. I'm sure Jessica can attest to this. It basically means that it works in about 20-point tiers. And it starts out around 640, 660, 680. And each time you jump up a tier, you get better rates and terms and fees combinations. And while our sweet spot may be FHA, let's not limit our tenant buyers to any specific program. There's USDA, there's Fannie Mae, Freddie Mac. Let's get them as high as they possibly can because we want it to be kind of fail safe too. Sometimes FHA may fall out for whatever reason, paint chips or hand railings or whatever it is. Yeah. So let's get them to where they need to be. And with our programs, we not only help them with age of credit, mix of credit, balance limit ratio, and all the other variables other than just credit repair to get them into the stratosphere as far as their score is concerned. So we're walking them along the way. And then on the front side, we're also helping them with an affordability analysis. We're making certain that they can afford the property. Mm-hmm. We get pay stubs and W-2s, and we calculate our debt-to-income ratio. And to protect the real estate investors, and Joe, you're going to love this one, we also issue 2 documents that can be used as addendums. So whatever contracts you guys are already using, please go ahead and use those. But additionally, we have documents that basically say they're not going to materially change their income or their debt load. We've calculated everything out for them, soup to nuts, to make certain that they're able to qualify. And they have to sign this document saying they're not going to change their income or their debt load. In other words, they're not going to go out and buy a car right before they go and apply with Jesse. In addition to that, we have a second document that says that they're going to enroll with a credit enhancement and follow our instructions along the way. Our credit enhancement is unlike any other in this industry. Credit repair is the disputing of negative, inaccurate information. There's a lot of companies out there that do that. Credit enhancement, however, is a little different because you're doing much more for the client. With the credit enhancement, we're not only disputing things, we're also helping them with the other 65% of the score that is not covered with credit repair. So there's a big difference. And we also, because we dispute everything every time, and other credit repair companies do things one at a time, because we're doing that, we're able to get the people done with our program a lot quicker. And we're even able to let you know how long it's going to be for them to be mortgage ready whenever they first start with our program. That's a key component. So therefore, whenever the real estate investor is sitting back there thinking, should I be putting these people in the property for 6 months, 9 months, a year? You're given an expert opinion of how long it's going to be based upon what's on the credit report to start and what we can dispute and what we feel we have a high confidence that we're going to have removed over time.
And that's really good because if you're assigning the lease option or if you're a realtor, you're doing this as a realtor, the listing, you can give that documentation to the homeowner, to the seller, and say, here's what our professionals who are into this are predicting, right? Or what are saying needs to be done. The tenant buyer gets that. Okay, so back to, I want to get to that more in just a minute, but getting back to like finding the good tenant buyer. Jesse and Paul, are there certain things that the tenant buyer can't have on their credit report, like a ton of unpaid taxes or child alimony and support? Can they have a foreclosure like in the last year, 6 months?
I'm fine with that as far as the foreclosure goes.
Yeah.
Again, it's wide though, right?
Okay.
Like if you couldn't just pay your bills and your mortgage 6 months ago, what's changed? I'm working with someone right now who it's snowballed and they did a loan modification and they tried. And it was one of the things that took forever. And it was back in the day when they said, we won't even work with you until you're late. So then of course, what do? Well, you start becoming late. Anyways, it took forever. So their pain isn't a few months ago. Their pain was a long time ago and the process drug them out. I'm cool with that all day long. But I know why. I know what it was. I would say, Paul, is there anything what do you look at and you say, I can't get this off the credit no matter what?
Well, I'm sorry, Jesse. There are elements that there's 2 different ways of looking at being denied a loan. And one is for score and the other one is for guidelines. And I think what Joe is somewhat alluding to is guidelines can kick you out for simplest, stupidest little thing like an item in dispute on a credit report as in a comment section. And it's an automatic turn down. It's not even a score issue, really. It's just an item it kicks it out of DU or LP, which is the online underwriting systems. How long since a bankruptcy? How long since a foreclosure? Those type of things will kick them out. But there's one other element, kind of, it's a wild card out there. Not many people talk about it, but we have a solution for it, and that is student loans. They sit out there, and sometimes you have people that have ungodly hundreds of thousands of dollars of student loans. There's a way to get these student loans consolidated and resoluted so that it reports correctly on the credit report, and there's income-based programs. There's a lot of different ways to look at this and to have those payments be much more affordable. And as a loan officer, Jesse, I tell you what, with having this extra feather in your cap, it's going to really help you bring those ratios in line if someone's got a lot of student loan debt.
Yeah, no, that's one of the biggest things, and it's hard to get around that. You know? Yeah.
Okay, so when you have a house under lease option and you want to put a good tenant buyer in there, my philosophy has always been, don't try to figure out and be the loan expert guy, right?
Yeah.
Work with a mortgage broker, work with a credit repair company, work with the company that will pre-screen your tenants, because it's going to help you focus on other things like talking to sellers and making offers, right? And getting properties under contract, getting somebody else to help you. That's that, because the guidelines, the regulations, that stuff changes all the time. And it's just much better to have somebody that you can say, here, talk to my mortgage broker, talk to this guy, and then work with them, right? So I wanted to ask you real quick, when you find a good tenant buyer and you're putting everything together, Jesse, talk real quick about that option deposit money. Whether you're staying in the middle of the deal or you're assigning the lease option away, it's really important that the option money is made out to a third-party escrow company. Will you talk about why that's important?
Absolutely. Yeah, and one of the things that you mentioned, I mean, guidelines, right? There's over 1,200 pages of guidelines just for a conventional mortgage, right? Roughly the same thing with FHA, and they change frequently. So, yeah, don't try to be the pro. And even if you knew exactly what you were talking about a year ago, it might be different now, right? So we keep up on that obviously all the time.
Yeah.
But for the option deposit, when the mortgage happens, and again, that's why it's so important to have a good team with you up front, because right now especially if you're new, you're giddy. You're like, oh my God, I've got a seller who's on board. I've got a tenant buyer who has money. This is going to happen. And you're thinking right now, but you might not be thinking when this comes to fruition 2-3 years down the road. And those things will catch up. So the money needs to go to a third-party source. It needs to look or even go to the seller. If it goes to you as the person in the middle who has no ownership in the home, even though you have an equitable interest, the lender is going to say, this doesn't count. They'll say, who the heck is, Whole Solutions Group? Who is that company? Who is this? I see a seller and I see a buyer, and then there's this independent third party in the middle that got paid. We can't count it. So that's why it is absolutely crucial. And again, there's a ton of loan officers out there that do amazing job. I mean, there's thousands of us, tens of thousands of us, right? There's not that many that have ever done a lease option or even know what it is or even know the paper trail to get there. I think it was last week, one of our Facebook crew in one of the groups said they talked to 2 different mortgage pros, and they're like, I don't know it and I can't work with it, and because they don't do it, right? What you don't understand, you don't do. So anyways, it's very important that the money goes to a independent third party. So make it out to the title company you're working with or the attorney's trust account. The check cannot come to you. Yeah. And if it does, or if you've already done this, I've talked to folks too who are like, dang it, I wish I would have talked to you last week, Jesse, or a month ago. If it's already happened, it doesn't mean the deal's dead. It just means that you may have a very hard time crediting that deposit towards their down payment.
Yeah.
Now,
that's what we're talking about, because this is so important that you're working with a mortgage broker who understands lease options.
Yeah.
Because you get mortgage brokers that will tell you you can't do that, or you can't get that money to apply towards their down payment. But if you're working with a mortgage broker that understands lease options, they know the right way to present it to the bank, and they know which banks won't do it, right? So I'm assuming, Jesse, these are good banks that we can put into a lease option to get refinanced or financed into a lease option. And then these are banks that even if you used a third-party escrow company, will not work with us. Am I right?
Yeah. And the thing is, you can never guarantee, right? You can never guarantee. You may have one underwriter you could have 50 scenarios, right? And you might have one of those 50 that say, I need to see that the money actually went from John tenant buyer into Sally seller's account. Let me see it go in Sally seller's account. Well, that might be an issue, right? It might be an issue. If you have that, you need to work around it. But most of them will see the money go through the escrow account and through the trust account or whatever, and see that attorney's name or title company or escrow, and they're going to be okay with that. When I started, honestly, I just had the money literally go from the tenant buyer to the seller, and I had the seller take their checkbook out and write me a check.
Yeah.
Probably the first half a dozen deals I did, because I'm like, I'm so scared. I need the money to go to you, but I didn't like the idea that the seller's like, cool, here's $8,000. Here's $8,000. I made them all happen, but it was, I'm like, I got to get around this a better way. And I should say around it, but just work it a different way. That's still a good way of doing it. So,
all right, let's talk about rent credits real quick.
Yes.
Rent credits. I wish I could, I get so many Facebook messages about this and stuff like that, right? That it can't be applied towards the down payment of the house. Well, I don't do many rent credits anymore to begin with, but when we do, they're for small amounts, and they go towards seller concessions, closing costs, just reducing the price of the home. I don't know why it trips so many people up. Why is this such a headache to deal with, rent credits, Jesse?
I'm going to attempt to talk and look for something at the same time in my Dropbox, but I have got one of the actual rules in here. So rent credits per FHA rules right now, and I want to say conventional as well, which again, FHA is the giant. Most of the time, in order to get the credit for the excess rent they're paying, you can only credit them whatever is above market rent. So market rent,
if it goes towards their down payment, right?
If it goes towards their down payment or closing costs. Yep.
Okay.
If that's what you call it in the paperwork. So again, this is why you want to talk with us before you do this. Like once you've already done it and then say, hey guys, help me out, it's too late. I should say it's too late. Part of what we can offer, that's too late. But the rest of it, we can help with everything else, right? But setting this up in the paperwork, you want to do that right. So you don't know what an appraiser is going to say market rent is in 2.5 years. You don't know what the heck they're going to say now. You could get 5 appraisers with 5 different things of market rent. So you can only count what's above market rent towards their down payment if you call it a rent credit per the rent credit rules. What I like to do is I like to advertise it's a rent credit, but then when I meet with them, I say, look, how we're actually going to apply this to you and give it to you is in seller paid closing costs. Then I don't care what the heck the rent credit is or what the market rent is or what an appraiser says. I can give up to 6% of the purchase price or 3% of the purchase price towards all their closing costs and prepaid expenses. And I know there's no chance of that getting messed with unless they change those rules, which I can't help. Yeah. The rent credit is a total crapshoot if you do it the way that the guidelines define it as a rent credit. Does that make sense?
Yes. So
it's kind of how you label it.
All the more reason why. I mean, it's important to know this stuff, but like you don't need to know the details of it. Just work with a good mortgage broker that does.
Yeah.
Okay. I want to talk about pre-screening tenant buyers. Paul, that's something I think you guys are doing as well, in addition to the credit repair. So, what are some of the things when you're pre-screening tenant buyers and applications are you looking for? Prior evictions, criminal history, verification of income, that stuff?
Yeah, actually, we're looking at all those. We're doing a criminal background check, Megan's Law report. We're doing a debt-to-income ratio. In other words, we get the income documentation in. So one of the red flags, like people say to me, because I'm a real estate investor too, and I go and I talk with a whole bunch of real estate. Oh, I'm just using Landlord Station, or I'm using Smart Moves by TransUnion. So whenever you use companies like that, they're going to give you a yes or no decision based upon what's on the credit report. They're basically set up for rent, not really rent to own. So it misses a big chunk of really what I would consider pertinent information whenever I'm considering putting somebody in $100,000, $200,000 house. I would want to know, can they afford the house? Can they afford the rent? Can they criminal background, Megan's on. Yeah, I understand that. But I also don't want to be told yes or no. I want to be told the facts. I want to know how long is it going to be for them to be mortgage ready? What's the action plan that they need to embark in order to get there? So we don't issue a yes or a no. We simply give you those facts and let you make the decision. And the cool thing is, since we are also real estate investors, we don't say things to mess up your deal. Like, we won't tell them that, oh, you have to have the credit repair in order to get in this house. That's not part of how we're doing business here. What we're doing is we're basically giving you the facts and we're giving them the action plan. So all screenings are not created equal. As same as all credit repairs are not created equal.
Yeah. Good. I wanted to ask about Dodd-Frank, and it would have been appropriate to ask it earlier because I'm backtracking a little bit.
Sure.
Talk about Dodd-Frank and how that relates to lease options, and does it?
Well, I've heard arguments from attorneys both ways, that it really has nothing to do with it, and I've heard that it does, and I've heard that if you have so many properties under different companies that you're protected from it, so many properties per year. I don't want to be the case, Joe. I don't want to be the poster child that ends up having to give my non-refundable option deposit back and 3 years worth of the money. So know this about Dodd-Frank. Dodd-Frank, the spirit of Dodd-Frank is, did you set the people up to fail? And it really talks about credit, and it talks about affordability. And if you did both the debt-to-income ratio, or not, better yet, had a third party do a debt-to-income ratio on them, get all the information on their credit report, get their income documentation, weigh one against the other, in consideration of the new loan, the new home mortgage, the taxes, the insurance, weigh everything out, have them sign it, that absolves you. Really doesn't absolve you, but I guess at least if it's put in front of a judge later on and there's a signature on it, it's pretty ironclad that you did your due diligence and you had that checked out. As far as credit's concerned, they're very, how should I say, vague about how they go about, did the people have the credit in order to qualify? If you can show them that you set them up with a credit enhancement company, and even when as far as to have them sign a piece of document that says that they're going to do the credit repair and they're going to follow the instructions of the credit repair company, and if they don't get there, most of the times it's because they didn't follow our instructions. Yeah. So I think it basically, again, just to digress, I wouldn't want to be the poster child. Does Dodd-Frank reach into our industry? Some people will tell you yes, some people will tell you no. I would say I don't want to be the test case.
Mm-hmm. Just do what you're doing above board. Keep it above board
and feel good about it. Let's feel good about doing the right type of business. And you said it on the onset. I love the way you said it, Joe. Is let's give these people a chance, or a better than average chance, to get this thing done. Let's set them up for success, not failure, and end up even having to kick them out of the house. Yeah. Let's make money and do the right thing at the same time.
We all know, I think, from our collective experiences, the people that give rent to own a bad name, or so and so did one and never do that, or the agents that think that, which even makes me more upset, is because they worked with someone or heard of someone who worked with someone who didn't do it right.
Yeah.
They're just taking someone, you can't sell, you can't buy, let's see what happens. And that's not the professional way to do it. When if you do this and this and this and this and this, these 4, 5, 6 things, and I think it's going to take you 2 years, so I'm going to give you 2.5 years. I'm going to give you more time, not less time. I'm going to give you 3 years. And I check in with you and I follow up with you, and you signed and dated this, and then it didn't happen, and you clearly went and bought that new boat that you signed 3 years ago you weren't going to do. I mean, like you said, if not to scare anybody, but you got to think, if you're standing in front of a judge 5 years down the road, when this is completely out of your mind of this transaction you did, what's it going to look like? And if you could say, I literally did everything I could in my power, I pay an outside team of people to help me with this, here's all the documentation, I think you're going to be in a much better spot than if you have none of that.
Good. Very good. All right. So Jesse and Paul, talk a little bit about, I've been sending people to you for a long time, Jesse. Hey, if you want a mortgage broker that can help you with your lease options, almost in all 50 states, right?
Correct. Yep.
Send them to contact Jesse. So are you still doing that, and talk a little bit more about that?
Yes, I am. And so it's kind of funny. So you bring up how Paul and I connected. I've been hearing Paul's name for a while, like, oh, you mean Screen the Tenant and my Pre-Qual team and Paul Ritter, that's kind of what they do. And they're doing a little bit what you do. And so Paul and I got to talking, and we have a very, very similar background and experience level. And what I'm doing is really more on the side of kind of like their mortgage coach to get them through, but with my pre-approval, and I do the finger quotes if you're listening to this, the pre-approval, we know they're not pre-approved, clearly,
Right.
but what do they need to do to get there? And I'm really getting into the weeds, really getting into details on, if you're self-employed, what's your taxable income, what's your write-offs, what do you need to do, how do we work with your accountant on this? And really setting up that plan, and then I'm talking with them afterwards. So I'm staying in touch with them throughout the program and the process. I, like Paul and his team, have a couple documents I use, and one of them is a tenant buyer before and after snapshot. And so my before and after snapshot is very, very similar to what Paul has, and it's saying, here's all your scores, here's your income, here's your debts, here's your collections, here's your judgments, here's everything, here's where you need to be, right? And maybe this is good, but maybe this is bad. And I go through everything, and I have them sign and date that as well. And so they know where it needs to be. And then I say, hey, you know what? Our team is going to be here to help you get there as well. So Paul and I started talking, and it's like, wow, we're really doing a very similar service, but I'm on one end of the spectrum, very mortgage heavy. And then Paul's on the front end with everything else, with the credit background, eviction check and all that stuff. And he gets into the debt to income ratio. And right when he kind of hands it off is where I really pick up with that stuff. So like, wow, this is kind of cool.
Yeah. Okay. So then, Paul, what do you do?
So what I do is I help people in the very front side. I'm more based in the tenant buyer, whereas Jesse's working with the real estate investor. So actually, Jesse works with both. His work is with the tenant buyer, but he engages a lot with the real estate investor as well. As I work with the tenant buyer on the front side, so for $50 lousy dollars, what they're going to get is that criminal background check, Megan's Law, sex offender report, and the debt to income ratio analysis, how long to be mortgage ready. The tenant buyer gets the action plan. We put together a little action plan. So this all then feeds into, when they do business with the pre-qual team, with our pre-qual team, they're going to then be referred over to two phases, both the credit repair, and then also Jesse will get contact information of the real estate investor, and he'll talk with them about making certain that the action plan is followed. So he's going to be more checking under the hood and making certain that the action plan is going to be followed. So he's going to walk them through from cradle to grave at that phase. I'm going to basically give you all the information you need to make a decision, yes or no, and then I'm going to also help with the credit repair. And then I back out. Then it's not my. Then it's on to Jesse, and Jesse basically walks them through and makes it all happen.
So talk a little bit more then about what happens during the 1 or 2 years of the credit repair. What is the tenant buyer doing, and is anybody following up with them during that time?
We have a full processing staff here. We've got people that generate the documents. We've got people that help them build new credit, go over their age of credit, mix of credit, and balance limit ratios. So during that process, our customized dispute letters that we're generating, we're not just going online and clicking a button, which triggers a system called eOscar, which is an electronic verification module. What we're doing is generating at each time a custom dispute letter that goes to the credit bureaus. And now the credit bureaus have to respond to that letter. They're given a certain amount of times. There's 28 different ways, Joe, that something can come off of a credit report. It's not just trying to beat them down by having them not respond and winning the game that way. It's a student loan that has a 60-day late without a 30-day late preceding it, which is an inaccurate entry. It's a duplicate account that may be a Verizon who sold it to a collection agency, and both of them report on the credit report. There are many, many different avenues to having an item removed. So we take them through that, and we're going to have as many negative things as we can have come off the report. And we have a very high deletion ratio. Our ratio is between 60 and 70%. It's quite high in this industry. And it's because we dispute everything all the time. You'll hear credit repair companies out there say, oh, you only want to dispute one or two things at a time. That's a bunch of bull. What you want to do is make that dispute as complex as possible, because you got to think of it in a reverse tactic. What happens at the credit bureau level is those companies, they have to get so many, these people have to get so many done a day. And if they're given a real complex dispute that's got 50 items on it, it's really hard for them to do that within the time frame that they're given to work on each individual account. So the more complex dispute removes more things. And it's very customized too, what we do. So the dispute resolution process with the credit bureaus, not with the credit bureaus. In other words, excuse me, not with the creditors. We're not a consumer credit counseling service. We're not here to negotiate that down to dimes on the dollar. It's the dispute resolution process with the credit bureaus being customized and having an end date on the date you start. That's what differentiates us from XYZ credit repair company out there. That's why this works for lease options.
Good. Okay. I just looked at my credit score, and I'm not going to show it to you because whoop, there you go. Okay, but I don't get it. It doesn't make sense. My score is pretty good, but when I working on refinancing a house, so they pulled my credit, and my score was about 100 points lower on what they pulled, the bank pulled, than what I see on the different, like, credit card companies, Discover, Capital One, all them. They'll show you your score, right? You know what I'm talking about? Or even Credit Karma, they'll show you scores and stuff like that. Why is there such a huge difference between what I'm seeing on my Capital One account, what I'm seeing from the bank? Does that make sense?
Yeah. I could write a book on this one. So, the variance in score is dependent upon several items. And it's really dependent upon the number one primary item is that it depends upon what type of scoring model it's falling under. Online, Credit Karma uses a thing called Vantage score. Vantage, not Advantage, VANTAGE, which is different than FICO, which is what Jesse's going to be using, and any mortgage broker is going to be using a FICO score. So that's why you see such a big difference. It's because you're measuring, the measurement mechanism is different between them. And in that, some of them put more emphasis or weight on items that, like balance limit ratio. Credit Karma really is a glorified credit card scoring system. And whereas mortgages are done by FICO. So Credit Karma, if you've got a high balance limit ratio, it's going to punish you big time. And if you've got a low one, it's going to overcredit you. So it's a lot more, because they want to sell credit cards on Credit Karma, that's what they're doing. That's why you see that variance. And to try to follow it on a daily basis, it's just going to drive you crazy. So just know this, the people that wrote these scoring models, these are people that with thick Coke bottle thick glasses and rubber rooms, and it's really where they should stay, because to try to understand that stuff, it's an algorithm that is that's many pages long. So just know that the data is what we're really concerned with, because as you change the data, it makes the score more volatile. For example, let's say I have 2 negative items on my credit report, and I have one of them taken off, and my score doesn't move much. Did something really happen? Oh yeah, something definitely really happened, because maybe the score didn't move much because at the same time I put something on my credit card. So now as I do one, the higher balance kind of counteracts the lowering of or removal of the negative item. So whereas people don't think that things are happening with their score, the more volatile score now can go up a lot quicker because I removed that negative item. Now, if I pay off my credit card, all of a sudden my score jumps up by 70 points. And they say, well, gee, that's what happened. Well, kind of, because it was one thing that factored into the other that put your score where it is. A score is a snapshot in time. It is not a motion picture. People think if I'm paying on my credit card or my student loan for years, that's factoring into my score. Yes, it is over that time frame, but it's only the instant in which Jesse pushes that button and asks for your score that it takes all the data, accumulates it, puts it all together, runs it through the algorithm, and spits out a score. So in other words, you can have a bad credit for a long period of time, and then you're good for 6 months, and it's going to affect you in a very positive way. So removal of negative things, making your score more volatile, and then following good patterns going forward is the secret to having and keeping a high credit score.
Good. Okay. Jesse, a question for you. Back in the day, 2005, 2008, some investors were doing refinances to get their tenant buyers financed. One of the things I just thought about is that coming back? Do you see where it could become easier maybe if a tenant buyer has been leasing a property for a year or two to just refinance them, or do they have to get a new mortgage? Does that make sense?
Yeah, no, that's a great question. And I talk about this a lot too, because it's a big difference if you're going to do a lease option or seller financing, contract for deed, land contract. And you can't do a refinance on a rent to own because there's nothing to refinance. Refinance is redoing a mortgage. Well, you don't have a mortgage, right? A rent to own is you're renting, and then you're going to get a mortgage. And when you get a mortgage, it's based on you getting a mortgage at that time. So there's no equity because it's not an equitable interest mortgage, right? We're steering away from that.
So, okay, what about this though? Let's say you're doing a sandwich lease option. You're staying in the middle.
Yep.
6 months from now, you want to get your tenant buyer cashed out. But you're a little nervous about getting them a loan. Mm-hmm. Could you or should you transfer it, change it to a seller financing deal 6 months later, then do the refinance?
Well, yes and no. So that's one of the misconceptions. Getting a refinance is not a lot easier or harder than getting a purchase mortgage.
Okay.
Like if your scores or whatever reasons causing you not to be able to get a mortgage to buy it, it's going to be the same thing for refinancing. Okay. They don't just go, oh, well, we really don't like these things, but it's a refi, so we don't care.
I've just heard from mortgage brokers in the past that the refinancing is easier.
Yeah. It kind of is, yeah. It's the rules don't change. Let me put it that way. The rules don't change. It maybe gets a little bit easier. Here's what's good. Here's what's good, though, is you avoid the 90-day FHA flip rule. Okay? Yeah, okay. That's huge. You will not run into that. And there may be more interest, or equity for the tenant buyer, right? Which is good for them and good for you. Because you got to look at both instruments. On a contract for deed, land contract, you have sold it, and they are 100% responsible for everything, for fixing it, repairs, everything. Yeah. Right? On a rent to own, it's in the middle. It's a little bit this, a little bit that. So they could refinance, and they could say, hey, per my contract for deed, I bought it at $150,000, and it's not worth $160,000. I've got $10,000 in equity, and I don't have to come up with a penny more. So on the other way of just the rent to own, they still have to come in with that down payment based on, now, and if I help you set this up right from the beginning, they have done it right up front with their option deposit.
All right, so let's talk about how to work with you guys. What does it cost? Can I make the tenant buyer pay for it? How does that work?
Yes. Yeah. So I would say I'll let Paul start with this, but start with Paul, and then I take it from there, and then we're working with them simultaneously.
Good. Okay.
Paul, go ahead.
All they need to do is go to prequalteam.com. It's PREQUAL team.com, and they'll see a tenant application there. And if you are one of these real estate investors that you want to control everything and do your own application, that's fine too. You can go, there's a landlord application there. Click on the landlord application and just put the information. Whoever goes there is going to pay the $50 for the screening process. And that initiates, that starts the pump. That primes the pump. And then from there, if they need credit repair, they get referred over to us. And at the same time, we talk to them about the pre-approval process, so Jesse can talk to them. And Jesse should get in there before you sign. I always say there's two closings in a lease option transaction. The first closing is when they get the keys and they move into the house. The second one is when they get the title sent over to them or in their name whenever you get in the mortgage. Even before that first closing, you should be talking to Jesse as a real estate investor so he can make certain that you're doing everything just like the question you just asked, Joe. How should I structure it? Should it be seller financing? Should it be lease option? Jesse's a great person to help you at least with the document part of that, to understanding the nuances either way from a mortgage perspective. So sending them over to the pre-qual team and having them fill out that application, and then we work our magic from there through the screening and the credit repair and the pre-qualification process.
Okay. So then what happens after? So you get a tenant buyer that says that's a good fit for your house. You send them to prequalteam.com. Mm-hmm. There's a $50 application fee. Is that right?
$50 per applicant. And I define applicant as those who are going to be on title to the property later on. Okay.
Tenant buyer pays that. Then what happens after that? What are the costs after that?
They're going to, since they paid that, they're going to get a $79 analysis per person free of the credit report. They're also going to get the $119 setup fee waived. And that's because they're listening to you here today, Joe. Because it came referred to us through you, we're going to waive $198 worth of fees. And so as we do that, that's what's going to happen next is that the tenant buyer is going to get all the instructions. We're going to contact them, get their W-2s and their pay stubs, and we're going to do the free analysis. And the real estate investor is going to end up getting a really nice deliverable report that's going to have everything in it that we'd mentioned, the worksheets and the criminal background check, Megan's Law report, and everything in there, how long it's going to be mortgage ready. So all that's going to happen automatically. It's going to be a great filtering mechanism. And here's the other cool thing I like to say too, is that let's just say, and I tell this people all the time, let's just say that you don't get the house. And I'm not here to tell you that you are going to get the house or you're not going to get the house. But let's just say you don't because you have cats and dogs and the house doesn't permit it, whatever. Okay, so what happens is I would encourage them to stay in the credit repair and also continue to work with Jesse, because what's going to happen is now they're a part of your buyer's list. Maybe there's another property you get next week, next month, or so on. This is a person that's on your active buyer's list, and now you know how many beds and how many baths they want in what area and how much they have for a down payment. So use this as a mechanism to build your buyer's list.
Yep. Very good.
Yep. And then from there, if, again, we want to make, they don't have to use both of us. They can use whatever they need. But I highly, highly encourage the full plan because, again, if you're thinking I'm going to outsource this so I can just go, like you said, go market, find more sellers, find more tenant buyers, and let the people that do this do all of it, that's the best way to do it. But from that point, what I would do then is get the information from Paul's team, which already has it, and then I'm going through and doing the mortgage pre-approval. And again, the reason why this is so important, Joe, before you close is I say, I might say, hey, you know what, guys, they just had a foreclosure here 6 months ago. They need 2.5 years. But, Steve, you set this up for 2 years. It's not going to fly. Well, you need to know that beforehand. So then you can go back to the seller and say, hey, look, you know what, my guys need 2.5 years, and my mortgage guy can even talk to you about it. And I will. And I can help close the deal that way. So we want to know that up front. And then what I recommend folks do, I've always done this anyways, but get a upfront, are you serious deposit? Okay, I call it $1,000, maybe $1,500 up front, and I say, tenant buyer, this will hold this property for you and you only, even as I continue to show this while we do our background checks and due diligence. Okay, I will apply it towards your option deposit, when you close. But if you do not and you change your mind, hey, we took the property off the market, right? So you get that $1,000, $1,500 up front of their deposit. Mm-hmm. Then, even if you pay for my services, which run $497 for the tenant buyer pre-approval. Okay.
Say it again. How much?
$497.
$497.
Yep. Okay. $497. That's it for the full tenant buyer pre-approval, and obviously staying with them for the whole process as well. Then, even if they backed out, if they did, which they probably should, but if they did, you still didn't lose any money, and I didn't work for free, right? Because nobody wants to work for free, and you made money, frankly. So if you know going into this, guys, that you're going to use our services, all you do is just, change your pricing, change your margin. If you're going to ask for $6,000 for your option deposit, ask for $6,600, and then you're good to go.
Yeah, very good. And it's really worth the investment. It really is, because it just means that you're going to save yourself trouble in the future, potentially, by avoiding mistakes, getting the right person in there. documenting everything so it just doesn't come back to bite you. And again, there's no reason why you can't make the tenant buyers pay for it, right? Yeah.
Can I give you a real quick example? I think you might like this one. My wife, who runs the screening company, the other day was working with these people, and they were asking for, I believe it was $1,500 monthly rent. In addition to that, they're asking for $10,000 down on about a $250,000 house. And when we ran the numbers, we came up with they need to, in order to make this thing fly, they need to bring in about $25,000, and they need to have $2,000 a month rent. And Jesse, you can attest to this. There's a thing called payment shock. It makes it really hard for a mortgage broker to do his job if you're collecting less in the rent than the mortgage is going to be later on. Mm-hmm. So we told them up front, hey, you need to get at least $2,000 a month on this, and you need to come in with more money. And guess what happened? That's what happened. The people anteed up. They, instead of giving $10,000 down, they put $25,000 down, and then the sandwich lease option was $2,000 a month. And that's how the whole deal went down. Only because, would TransUnion Smart Moves give you something like that, or the landlord station? They're not going to even know how to spell debt to income ratio. So that's kind of where this thing goes. And when Jesse starts working with it too, these type of things become more apparent to Jesse as well. So you need to have a team of people in here who understand these things.
And this is so important too, when you're talking to the seller and you're explaining the lease options to them. You can tell them, like in those of you that have my course, I have that credibility kit that you send to sellers when you make offers, right? Well, you need to have a mortgage broker on there. You need to have a tenant screening company and a credit repair company on there. And so this then gives you the opportunity, which means you're going to do more deals. This gives you more credibility, especially if you're just getting started and you don't feel like you have that. Well, now you do.
Well, and I know we got to wrap up because we've been here for a little bit, but I want to say 2 weeks ago I was on a call with one of our students, one of our clients, and he said same thing, right? All you need to know is I got a tenant buyer. They say they have money. They want the property. When you're at that stage, guys, that's when you want to talk to us. Okay, that's when you want to go to Pre-Qual team.
Pre-Qualteam.com. That'll be in the show notes of the podcast.
Yes.
PREQUAL team.com. Jesse, one more thing too.
Yeah.
You said you would give us a 33-point checklist. Is that right?
Correct.
33 33 checklist of what?
Your flight checklist, man. Your flight.
Yes.
So your tenant buyer 33-point checklist. So
nice.
After doing lease options for about 7 years, this is everything I've been through, both as an investor and as a mortgage pro, going, gosh, I should have asked this. I should have looked at this. I should have done this. And I go through this every time with my clients, and I go through them with your tenant buyers as well. So it's one of the things you're getting for the $497 is I'll do that for you, but we'll just give you this form. So even if you don't want to use our services, you have this checklist to go off of. The other thing I go through is my before and after tenant buyer snapshot, right? Here's your numbers today. Here's your numbers tomorrow. But I wanted to tell you this really quick is 2 weeks ago, I had a guy who was on the phone. And he said, hey, you know what? The seller really wants to talk to you. He wants to hear from a mortgage guy. He's like, call him my bluff. I said, cool, man. Let's line it up. So I talked to him on a Saturday morning. Wife was mad because, Saturday morning. I said, hey, honey, 20 minutes, 30 minutes. And I talked to the guy, went through everything. I said, you know what? Frankly, these tenant buyers look great. I've put way worse conditions, our tenant buyers in way worse shape into homes than these guys. These guys are great. I think we're good to go. He's on board. He's comfortable. He moved ahead. I also talked to the tenant buyers 2 or 3 times. And I explained to them that, they're safe. If they do what they need to do, they should be fine. And that honestly, if it falls apart at all, it's really on them. Yeah. Because we're giving them every single tool that they need to do. So I help close the deal. I mean, I'm not going to pat myself on the back and go, rah, rah, I did it. But I guarantee you, if I would have had that conversation, been a little, I don't know, or if there would have been any sort of uneasiness in my voice and what I said and how I said it, it may not have happened. So, I want you guys to get the deal done. I'm an investor just like you,
Yeah, very good. All right. So to get that 33-point checklist that Jesse talked about, I'm going to have a special link for you guys. It's going to be reimpodcast.com/Jesse. REIM for Real Estate Investing Mastery. REIM podcast.com/Jesse. We'll get that on over to you, that checkpoint checklist thing. Also want to give you, again, one more time, prequalteam.com, prequalteam.com. If you're doing lease options anywhere in the country, that's why I'm so excited about this, is now you just have one place to go, right? You don't have to go and find a local mortgage broker in whatever city you're in. Or if you're doing it in your own market, or if you're doing it in Jacksonville, Florida, okay, we're going to be using Jesse and Paul. So this is really I highly recommend these guys to you. So anything else you want to say? Any parting words, Paul?
No, I want to thank you for inviting me. Thank you, Jesse, for setting this up. And I really look forward to working with you, Joe, and any of your students.
I love it. I'm writing down reimpodcast.com/Jesse before I forget.
And it's Jesse, Jesse. Just
yes.
There's no IE. I'm a dude. The girls have the IE.
Yeah.
Those are just D. But hey,
Jesse.
Correct.
Very good.
But no, Joe, thank you so much for having us on. I very much appreciate it. And yeah, we've known each other a long time. And I always tell people, the best investment I've ever made, honestly, is getting your course. And I told you, first deal I did, $8,000. That was just the option deposit, let alone the monthly, let alone the back end. Yeah. And it was just for, taking a chance and then doing the work. And so it's a phenomenal technique that can help a lot of people do something really good and make some good money. So yeah. I appreciate it.
Very good. So there's been people have been typing in questions into the Facebook group, and I will answer them as soon as we hang up here. So, and Jesse, are you in my Virtual Lease Options Challenge Facebook group?
I don't know. I got to take a peek. I'm not sure if you
I'll invite you if you aren't. But so you look under this video, you might find some questions in there in that Facebook post that you can answer. Hey, thank you guys very much. Thank you. If you're watching this in the Facebook group, or if you're listening to this on the podcast, we appreciate you guys. Go to realestateinvestingmastery.com to get the show notes. realestateinvestingmastery.com to get the show notes. And if you want that 33-point checklist, which I really recommend, go to reimpodcast.com/Jesse, Jesse. We'll see you guys later. Thanks a lot.
Yep. Thanks, Joe.
Thanks, Joe.
Thanks, guys.
Bye-bye.
Thanks, Jesse.
Bye-bye.